Next up is Professor Ferdi Meyer, who will be giving an outlook on the South African soybean industry from a global, regional, and local perspective.
Thanks very much, David. It's a great privilege being here today, and also Dirk having this discussion around the economics of soybeans, something that we are obviously all passionate about, and also I'm sure that the audience is looking forward to an economic discussion around the soybean production, and we're also certainly looking forward to questions around it. What I'm going to talk about this morning in the short presentation, and some of these points will be addressed in a lot more detail also with Dirk if he talks about specifically around the production side of it, is just taking a step back and saying, what does the world look out there in terms of global production, the regional production, and what are the implications for our industry here in South Africa. What we have in front of us on the chart is a visual, and the size of the bubbles gives you essentially the size of production in the various regions across the world. And it's clear that the global soybean production is really concentrated in the Americas, with Brazil, Argentina, and the United States taking a lead in terms of global production. If we carefully eyeball that figure, we see at the bottom South Africa there in a small dot, currently around 1.9 million tons, which is an absolute record crop. These were 2018 and 19 figures from the OECD. The purpose for this graph is actually on the table, is just to look at some of the percentage growth rates that we've seen over the last decade. And there you can see soybeans. It is a significantly smaller area under production compared to maize, if we think globally. So just comparing those numbers, 124 million hectares on average per annum over the period 2016 to 18, whereas maize about 190 million hectares. Other oil seeds typically include something like canola at about 88 million hectares. Now let's just look at those growth rates, annual growth over that period, and those are actually 10 years or 8 years. We can actually see that the area expansion in soybeans has been faster than in maize. So for example, soybeans 2.7% per annum expansion, where we've seen maize at 2.1%. And then some of the other commodities like rice, actually very little expansion, only 0.6%, wheat even less, 0.1%, and then some of the other coarse grains like sorghum, for example, actually contracting in the area. And if we look at the outlook, and this is from the OECD, FAO reports, we still see that soybean expansion in hectares is slightly faster than maize. And this also hints to the overall trends in terms of consumption and in terms of markets. If we then just look at the current situation, we're actually in a record season if we think about prices. So global prices are really at record highs, and what we're essentially looking at is all-time peak prices. If you take just the graph for 2021, and those are vegetable oil prices, so just looking at a price of, for example, sunflower oil or even soybean oil, all sitting around about $1,400 a ton. Now just compare that to a season ago where we just had prices of about $700, $600 a ton. So just this big increase in global prices. The projection is that these prices will come down within the next season or two as production is ramping up based on these high prices. So margins have opened up. But on the left-hand side of that graph, let's just look at the reason for these higher global prices. So actually it's almost like a perfect storm, where we had stock levels declining over a period of time. So over, let's say, the last 3-4 years, we had consecutive reduction in the level of stocks, in other words, stock to use ratio coming down. And then we suddenly had this big demand from China, pulling in a lot of beans very fast as they're building their herd, their pig herd, after the African swine fever event. And you see these stock levels drawing down very fast. On top of that, you put the palm oil market that's really been under severe pressure from a climatic perspective, so lower yields, but also an issue around COVID with the migrant workers, labor not being available freely. And suddenly you've got this perfect storm. But as I mentioned, prices expected to come down in the next 2 to 3 years, and even faster depending on supply response. What's the implication for that for our local markets? And there you can see it, the spike in 2021 with our local prices here in South Africa increasing on sunflower above 8,000, 8,500 Rand, and I know there were some periods where it was even higher. Soybean also comfortably trading at 7,400, 7,500 Rand a ton, and also higher at some periods. And if we look ahead, again, as global prices are coming down, our projection is that prices will also come down on this side. We are linked into the global market through vegetable oil, through the meals derived from the seed. And again, just taking a step back, we didn't see that big of a rise on the maize prices and on the wheat side because we've got this reference price in place. We actually didn't see much of a price movement in those two markets. If we then also take the region into consideration, this is another success story if we think about expansion in soybean production. So just in the Eastern and Southern African region where we are working on the data and we have collected data over some time, we can see that production has more than doubled. So just taking the last decade, it's moving from 1.1 million tons to about 2.7 million tons of soybean production. South Africa did make the largest contribution to that increase. And there you can see the bar charts, and it's also producing on scale at a much higher scale. But let's look at our neighbors, Zambia, Mozambique, up into the eastern part of the country, of the continent, Uganda, Malawi. All of those markets did increase their soybean production. But if you carefully analyze the trend, this jump actually occurred before. What I'm presenting on the graph here is from 2016. We had those increases earlier in the decade. So shortly around 2008, 9, 10, 11, 12, that's where we saw the increases. Those markets have now been filled. And I think that's an important message around how much more, once you achieve equilibrium and prices are moving into a equilibrium pricing condition, then you really need to look at your value chain and the processing of those beans. What are you going to do with those surpluses? And that's really the question in our neighboring countries where they've hit that ceiling quicker. And in South Africa, we are moving in that space now. And I'll get to that in a moment. Just a quick glance at soybeans' contribution to the growth in the South African agriculture sector. And we really have been blessed with wonderful weather. It's actually a combination of wonderful weather, higher global prices, weaker exchange rate last year, and that gave us a phenomenal growth of 13.1% in real terms. So in agriculture, the South African agriculture sector has been the only sector that has expanded during the COVID period of 2020. And BFAP's projecting another expansion of another 7%. Again, record yields and record crops. Again, maize, second highest crop that we're anticipating. Soybeans, the all-time record harvest. Canola, another record harvest crop. So again, a significant contribution that soybean is making to the growth of the agriculture sector. We've talked about the regional dynamics and markets reaching equilibrium. And on the left-hand side, we see the rapid growth. These light and dark blue graphs are showing the growth in soybean production over time, the last 10 years, and really expanding rapidly. 10 years ago, around 500, 400,000 tons. And now, as I've mentioned, 1.9 million tons. We can clearly see the jump. It's a big jump. Last year, we did a 1.2 million tons. We currently are experiencing, we had very good weather conditions, and Dirk will talk about these dynamics at farm level in a lot more detail. The point that I wanted to make is actually on the right-hand side. At 1.9 million tons, our local industry, and especially up in the northern parts of the country, is getting into an equilibrium very quickly. So we actually have sufficient beans in the northern part to meet most of the meal or the oil cake requirements in the northern part. We still have enough crushing facility or capacity up in north to crush these beans, but we are moving into a price situation where prices, where they tended to trade between import parity and the derived price of the meal and the oil, they're tending to trade closer to export parity. So what's the implication on that in terms of import replacement? And specifically looking here at the meal and the oil, what you have in front of you is a figure. On the left-hand side, it gives you the blue bar, which presents soybean oil cake production domestically, and the green bar are the imports coming in to the country. And you can see 2010, the progress that we've made to 2020, that green bar getting smaller, and then 2030, again, BFAP projecting around about 200,000 tons, 240,000 tons of meal still being imported. On the right-hand side, though, vegetable oil, we know that in the bean side, if you crush that bean, it's 17%, it's roughly 17, a little bit more maybe, that goes to the vegetable oil market out of a ton of beans. And that's obviously making a nice contribution to the vegetable oil market, but that dark or that black color that you have there, that's palm oil imports. And those are coming in highly competitively. And South Africa is importing about 50% of its local market of vegetable oil. I'm going to skip this graph. I think Dirk is going to talk about that a little bit more in detail. The bottom line of this graph is just if you really have to look carefully at the level of human consumption, the volumes that are currently, the soybeans that are currently consumed in the market. And according to the SAGES figures, around about 25,000 tons out of a total 1.9 million ton market. So currently making a very small contribution towards the total consumption levels of beans. Just taking a step back then, what's the future? What does the future hold in terms of area planted? And there we can see the green line, which represents soybean area under production. Again, the success story of expanding hectares, at the same time increasing yields, and the long-term projections that soybean hectares will rise to around about 1 million hectares. But that, again, taking into consideration what's the space that we have in terms of soybeans in the feed market. And we'll have a greater discussion around that. And that links back to productivity gains. What we have in front of us here, the figure comparing yield levels, and just looking at soybeans there in the middle, where we are comparing absolute levels per ton, per hectare. So yes, South African yields are lower compared to US, Brazil, and Argentina. But if you look at those green diamonds on the graph, that presents the average annual increase in yields. And there we can clearly see that soybean in South Africa, the average increases in yields, in other words, the indicator of productivity, it's a very important benchmark for us to understand, are we keeping up with international trends in terms of increases in yields? And the answer is, for the last 10 years, yes, increases have been in line, although at a lower level, but that's the kind of the positive message for the local industry in terms of breeding and technology. There are more areas for expansions in South Africa for more production, but as mentioned, you cannot produce without the market, and that's therefore the developing the markets, expanding the feed market demand, and even looking at exports and the dynamics of exporting soybean seed has to be explored and further pushed to open up the further areas that we have in terms of production. And this figure explains another dynamics around it. It's not just only about producing the beans and the markets, it's about the infrastructure. It's about the whole supply chain, the dynamics within the supply chain, the competitiveness of our crushers, of our processes, and the logistics. And what we present in this figure, this map, is essentially the dilemma that South Africa faces in terms of 30% of its meal and feed use is in the coastal areas, but the majority of production, or all of the soybean production, is happening up in north. And that shaded area gives you a clear idea of soybean area planted as well as yellow maize area planted. The red dots give you an indication of feed mills. So yes, we have a concentration of feed mills in the north. We also have feed mills in the coastal areas. So processing capacity is available. The demand is there for the animals, but that's where the South African industry is facing a huge amount of competition from imported soy meal from especially Argentina, coming in very competitively. and we have to rail or by road transport the meal down to the coastal areas. Currently, the rates for transporting a ton of meal is around about 800 Rand a ton, and if you take those costs into consideration, you still have imports coming in at a more competitive price for the mills and the industry. I want to conclude, this is a very detailed graph or figure, too much detail in it, but essentially, where does the human use for soybean fits into the value chain? And this is, even if you talk to the specialists, this is even a simplified picture because there are various nodes in the processing process where there's an offtake of a soybean product, whether these are isolates, whether these are flakes that are taken off within the process of the processing of beans. And as I've mentioned, the more consistent supply of raw materials, the pricing that can be more competitive at export parity levels, we do anticipate that there's opportunity for the expansion of soybeans, especially in the products in the human use market. I want to thank you for this opportunity for presenting the global outlook and looking at some regional dynamics and then pulling it through to the local industry implications. Thank you very much.